What's up, YouTube? Welcome to another episode of KJ the Investor. It's yours truly, KJ. And without further ado, let's go ahead and hop into the portfolio. Right now, guys, start of the market day. It's a Monday. Investing account sitting at $60,365. Well, $370 now. We're up today in the pre-market already, $323 or 0.54% on today. Right now, the buying power is $559.68. And from what I can see, guys, the market did a good rebound from the last couple of days, especially from the weekend. I'm going over these cryptocurrencies with you. If you guys know, I bought some Ethereum the other day. Right now, Ethereum's trading at $32.93. I bought some at $31.48. I put like $100 in, man. I made a couple of bucks right there, almost $5 in Ethereum. Nothing too crazy because I'm a buy and hold type investor, not really too much into the crypto. Next, I got some USDC, 101 shares, $1 a piece. Those just to give me some more exposure to cryptocurrencies. Also, I got some Bitcoin. Right now, Bitcoin is at $95,000. I'm sorry, a share. I bought some at the $97,000 price. I'm down $2.93 in Bitcoin, but it's okay because that wasn't a big position as well. That was my first time buying some Bitcoin. The other day when everything in the market was like trending low, everything was on sale. I call it the Christmas sale, even though I don't really mess with that, but I'm just saying it was on sale. So I got me some Avalanche. I got a smidget of Avalanche. Avalanche is trading at $36.41 on today, and I got some Avalanche for free back when I did the Robinhood crypto initiatives, back when they was giving away some free stocks and different things. Okay, now stocks and ETFs, the bread and butter for me, are back at premiums this morning. In the pre-market, as you can tell, Microsoft is sitting at $439.25 in the pre-market. Now, I'm gonna say this, put this disclaimer out there. We look like we've bounced back from a downward market for the past 10 days, but I want to let you know, I don't think we're out of the woods completely. Keep your eyes on your investments. Buy and hold. It's been my strategy all year long. I told you guys earlier at the beginning of 2024 that this year was going to be a banger, and it has been just that. Look at the year-to-date return on Microsoft. Year-to-date, 17.49% or $66.39. Up. So over almost an 18% return on Microsoft if you had been invested in the Mag 7. So I got 3.7 shares. Microsoft market value is $1,627.82. Average cost was $411.89. Total return, I'm up $101.38 or 6.64%. So Microsoft, not bad of a return. Awesome investment. Bought and I held long term. I'm going to continue adding to that position starting in 2025. I'm going to be getting more into the individual stocks more in 2025. This year, I really expounded on ETFs, filling out my standard ETF, which is my S&P 500. As a matter of fact, let's take a look at that SPLG. I got my SPLG portfolio right here, $69.93. What it's trading at. I got 200 shares, over 200 shares of SPLG. Market value is $14,035.35. Average cost was $63.35. I'm up. Total return $1,320.69 or a 10.39% increase. Usually, the S&P 500 will return historically between 7 and 10%. And right now, this one, my portfolio is returning me 10.39%. Year to date, though, however, the S&P has returned 25.93%. So, guys, I'm telling you, if you're on the path to building wealth, if that's what you really want to do, if you want to get off that hamster wheel, if you want to get off those jobs, if you want to get out the rat race, I'm telling you, investing is the way to go. Paper assets right now has so much opportunity. I told you guys at the beginning of 2024. As a matter of fact, it was like February 2024 when I first really dove into these individual stocks and ETFs headstrong like I am now. I was telling you guys that these investments were going to pay off big. Historically, the S&P returns between 7 and 10%, like I just said before. But you see for yourself that it's returned 25.93%. And we only got a few days left in 2024. So that was my foundational ETF. And I'm making sure I add to that. Well, I've added to it. So now it's just time for it to sit and grow. Now, for my growth ETF, FTEC, FTEC is my Fidelity Information Technology ETF. Right now, sitting at $187.89. That's at a deep discount. Got a small dividend coming in. But, you know, the dividends for these are not that important because they are just for growth. You get your appreciation in the growth. Shares, I got 5.33 shares. I'm going to definitely be working on this ETF come 2025. I'm going to be kicking up more opportunities to buy this ETF in bulk. I'm going to get these numbers up just like I did SPLG this year. I'm going to, from 0 to 200, I'm going to be getting FTEC up to those numbers as well. I got market value of $1,002.66. Average cost, $156.09. Total return, $169.70, or a 20.37% increase. Look at that, guys. This is some growth for you. 20.37% increase on FTEC. Let's look at the year-to-date. Year-to-date is sitting at 32.73% ROI. Wow, man. Over 30% of growth in FTEC this year. If you had been investing in FTEC all year, you've been over 30% return on your investments. I'm telling you, next year, I'm going to have a monster year with this in my portfolio because I'm going to be expanding my shares in FTEC. Excuse me, guys. I'm trying to clear my throat. It's kind of early in the morning, and so that's what's going on. Next up, I want to take a look at is my dividend paying big boy ETF in my growth portfolio. It's going to be SCHD. SCHD kind of helps protect against downward turns in the market like we just seen for the last 10 days or so. SCHD also helps pay out big dividends, bigger than the common ETFs do. Right now, the Schwab U.S. Dividend Equity ETF is shooting out. It's sitting at $27.40, shooting out a pretty good dividend. Shares, 237.88 shares. Market value is $6,518.14. Average cost is $26.30. I got total return of $261.82, or a 4.18% return. That's okay because, like I said, this is a dividend paying dividend ETF. This ETF is for the defense of my portfolio. That FTEC was really for the offense of my portfolio, and the SPLG is for the neutral ground, having that common balance. Let's look at the year to date. Year to date, SCHD is up 8.36%. Not bad for a dividend paying ETF, not a growth ETF. You see kind of right here at the end of the year kind of fell off a little bit in the trajectory. It was up 16% on the year, but then it kind of fell off like these last 10 days. We had a market pullback, but it's okay. Like I said, we're still making gains of 8.36% of the year. Next up, another ETF I got that's going to help me get to freedom is DGRO, the iShares Core Dividend Growth ETF. This is a hybrid. This particular position is a hybrid between dividend paying and growth. It's sitting at $61.96 right now. As you see, I got a dividend coming up pretty soon, $27.96. I got 73.95 shares of DGRO. Market value, $4,582.38. Average cost is $56.75. Total return is $385.11, or a 9.18% increase. If you had been investing in DGRO all year, you'll have an increase of your money of 15.70% year to date. DGRO, guys, is another position I was considering selling. This position I was considering selling just to get the profits out of it. I also get the market value out of it. and try to redeploy these funds into something else that's going to probably give me more growth. But excuse me, for now, I've been buying DGRO, holding on to it long term. I might continue to do that strategy. I don't know yet. I'm gonna see until we're gonna see what the market does. NVDA, I got 204 shares in NVDA, sitting at $136 per share. Meta is at $593 per share. Alphabet Class A and C. Class C is at $194 per share. Class A is at $193 per share. Apple sitting at $255 per share. Amazon's at $227 per share. So, guys, Mag 7's doing good. Portfolio's doing good. Serve Robotics. I'll show you this real quick. Sitting at $15.15. We're up in the position, even in the after hours. I have 10 shares of Serve Robotics, bought at $8.67 per share. Market value $151.50. I was going to only use this as a short, guys, but it ended up coming a long in my portfolio. I'm going to keep it for the long term because why? The total return, $64.80, or in other words, 74.74% increase. Look at that. Almost a 75% increase on the dollar. Year to date, Serve Robotics is up 218.95%. Crazy growth, crazy gains on this year. This company has really excelled in expectations and what it's designed to do. NVIDIA has partnered with Serve Robotics, also which helped giving it a big boost in the market. So I'm going to continue holding my stake or my share sizes. As a matter of fact, I may expand my share sizes in companies like Serve Robotics and AMD and MicroStrategy and many other stocks and ETFs that I'm getting into in the tech sector. Well, guys, that's all for now. Just want to give you like a portfolio update. Like I said, we're sitting at $60,391 over here in the traditional IRA, $43,087 here. We're up $304 in this position as well. Buying power, $12,495.67. So we're looking pretty good. $103,480 in the portfolio altogether, and I have another $7,700 in the Fidelity high yield savings, so investing account as well. Until next time, guys, this is Katie the Investor signing off. Over and out. Peace.